In 2008, as auto giants teetered, one seemed invincible: Toyota. But what if this global symbol of reliability had buckled, tearing through supply chains and consumer trust? And let's find the answer to the question, what if? Had Toyota collapsed in 2008, the immediate aftermath would have been a devastating economic tsunami originating from Japan. The nation would face massive job losses, not just within Toyota directly, but cascading through its immense network of suppliers, crippling its manufacturing bedrock. This seismic event would trigger a significant contraction of Japan's national GDP and ignite a profound crisis of confidence. Globally, Toyota's extensive and interconnected supply chain would unravel, causing widespread parts shortages and manufacturing halts for countless other automakers and industries, creating unprecedented domino effects worldwide. The fallout would deal a severe blow to global investor confidence, particularly across the auto and broader manufacturing sectors, making recovery harder for struggling companies and unleashing pervasive market instability. Toyota's absence would dramatically reshape the global automotive battlefield. Rivals like Honda, Nissan, Hyundai Kia, and even European or American brands would aggressively scramble to absorb Toyota's vast market share and loyal customer base. This intense competition would drive rapid expansion for some, leading to new leaders. Furthermore, with Toyota's benchmark gone, other manufacturers would be compelled to quickly innovate and significantly improve their own quality control and manufacturing efficiencies. They would need to meet the substantial consumer demand for reliable, affordable vehicles that Toyota once so expertly provided. Such a seismic shift would naturally alter regional dominance. Significant changes in automotive power would emerge across crucial markets like North America, Southeast Asia, and Europe, as remaining players consolidate their positions and potentially forge new strategic alliances to navigate the altered landscape. And Toyota's hypothetical collapse would dramatically reroute the automotive industry's future, especially regarding green technology and production methods. Without the pioneering success and mass market appeal of the Prius, the hybrid revolution as we recognize it would likely have stalled. Its widespread adoption and further development might have taken a considerably slower, perhaps even less prominent path. Moreover, the globally influential Toyota production system, the very bedrock of lean manufacturing, might not have become the universal industrial standard it is today without Toyota's ongoing leadership and global presence, potentially allowing alternative operational strategies to gain greater prominence. This vacuum could have pushed remaining automakers to shift their focus more aggressively towards pure electric vehicles, fuel cells, or other alternative propulsion systems much earlier, fundamentally reshaping the trajectory of sustainable transportation without a dominant hybrid competitor bridging the gap. The hypothetical collapse of Toyota would unleash significant geopolitical and global trade repercussions. Existing import/export balances would be irrevocably altered, potentially leading to new trade agreements, or conversely, increased protectionism as countries scramble to safeguard their domestic auto industries from intense competition. Furthermore, Japan's standing on the world stage would suffer a severe blow. Losing such a pivotal technological and industrial titan would diminish its economic leverage and influence in global forums, weakening its voice in international trade negotiations and economic policy making. Lastly, the massive void in manufacturing capacity would trigger a significant shift in global production. Other nations, eager to expand their industrial base, might aggressively attract foreign investment, redirecting manufacturing hubs away from Japan and Toyota's former overseas plants to new strategic locations worldwide, fundamentally reshaping the global automotive production map. The consumer's automotive journey would undoubtedly look different. Without Toyota's robust presence, car buyers would confront significantly higher prices and a noticeably reduced variety of reliable, affordable options, particularly in the ever-popular compact and mid-size categories. The fierce competition Toyota provided, which often kept market prices in check, would simply vanish. Consequently, millions of loyal Toyota drivers would be forced to explore other manufacturers, reluctantly shifting their allegiances and reshaping long-term consumer perceptions of quality and value across the entire market. Adding to the distress, the vast number of existing Toyota vehicles on the road would face an immense struggle. Parts availability would become scarce, specialized service a premium, and resale values would plummet without vital manufacturer support, leaving countless owners in a deeply challenging situation. Toyota's 2008 survival averted a global economic and industrial upheaval. In your opinion, what if Toyota had gone bankrupt after the 2008 crisis? Share your thoughts in the comments.